Hello everyone, welcome to Microwhale. My name is Roland, and today I want to talk to you about DeFi and the crypto bubble. And before we jump into this mirror board I've prepared here, I want to just show you my basic thoughts about how to approach bubbles, because even though I do believe that crypto is in a massive bubble, I think it's the perfect spot to invest in. So here are my thoughts. First of all, probably everyone who's investing has seen this at this point. Here we can see the balance sheet from the Federal Reserve from 2008 to today. And we can see that in 2020, when there was fear of depression because of coronavirus, we had massive printing, and since then the stock market had phenomenal returns, as we can see here. I don't know about you, but this doesn't look like organic growth to me. Just like a basic observation. But what I want to actually look at is the bubble from 1929. So in 1929, we had a similar setup as we have today, in terms of that there was massive debt, and people were investing lots of it into the stock market because like the best way to earn more money was doing that. So as we can see here, we had a massive run up and then a massive decline, and I think it even declined by, what was it, almost 90%, I think. It's 90% decline. So yeah, and the reason why I marked this blue circle right here is if we look at the Dow Jones, also a 3-month chart today, I think it has some similarity to that like blue dot, as we can see here. So yeah, I think they look similar. Of course, history doesn't have to repeat itself, but sometimes it rhymes. So let's see how this plays out. Either way, I think it is a very interesting chart to look at. And I do believe that, even though I do believe that the US dollar will eventually crash, I think we are not there yet. I think the coming years will probably be extremely parabolic, and you can make lots of money. And I mean, they're doomsday series since like 2010 basically, and I mean they may very well be right in the end, and I do believe that there's a very good probability that we will have a massive market crash. I don't know how this will play out and when, but I don't think it is right now. But I do think that the coming years will be very, very volatile and turbulent. So what do you do if you think that you are in a bubble? Well, you diversify across your favorite bubbles. So there were lots of bubbles in history. We had the tulip mania phase, we had the Nasdaq in 2000, and so many other like smaller bubbles, like for example with lumber. And the best approach to these bubbles is to think, okay, how long can these trends last? And be first, or most importantly, don't be the last one. Right. So even though I do believe that crypto is a massive bubble, and I will get into that very soon, I think there's lots of money to be made. For example, if you would have bought tulips when there was a tulip mania, you would have made lots of money and probably had better returns than everyone in the stock market at this time. And the same goes for crypto. And here's a very interesting article I've recently read from Zerohedge. I had this thought for a while myself, but it was very interesting that he also wrote about this. Just patting on my back, yeah, I had the same original thought. No, but for real, like if you're investing, and I started investing probably, seriously, I really invested only like since last year, and I had more success than I anticipated in a very short time. Like I had like these Excel sheets, and I was thinking, okay, if I make like 10-15% per year over the next 10 to 20 years or so on, and then I was like changing numbers, like how much I would put into it and so on. And basically I was like, okay, I want to be a millionaire by that age and something. And I realized, okay, I'm pretty good, I think, at picking stocks, so I need to raise my capital. But then we had like Corona, and like the stock market had better returns than I could have ever imagined. And now we have crypto. I got in it a little bit late, but still I made very, very decent money. So basically they then had existential depression, where I was thinking about, okay, what am I doing with my life? And I want to contribute to society. So yeah, what exactly is it I'm doing here? because there are so many people, they are studying in university and going to work, and I do believe like the average cashier at your local supermarket probably creates more value to society than I do, but still I make more money. So this is very unfair, and I think this system is pretty rigged. But either way, I am going to exploit it, and I think everybody who doesn't, I feel bad for them, and I would just encourage everyone to, if you don't have money, go work for a little bit, make money, and then put that money into the stock market. And once you have enough money to scale it, just focus on that. Because at the moment, even though the system is rigged, it's just the best opportunity to make money, I think, in probably the last 100 years in crypto. So just to go into this article real quick, here. Of all the mass delusions running rampant in the culture, none is more spectacularly delusional than a conviction that we can all get fabulously rich from speculation while producing nothing. The key characteristic of speculation is that it produces nothing. It doesn't generate any new goods or services, boosts productivity, or increases the functionality of real-world essentials. And I mean, there are millions of people in crypto, right? And there are left IQ people, right IQ people, everyone in the middle, and everybody wants to get rich quick, right? And when you're in crypto, you're not looking at 10-20% a year anymore, or 50%. You're looking at 10x, 100x. That's your goal, right? So this is absolutely insane. And for many people, what's the goal afterwards? It's just to retire, like buy a nice house on an island and chill your life. So for me, I do want to work eventually, and I want to put that money to work. But in the end, we are really not really creating much. And if you look at crypto, there are so few developers actually doing something. If you look at Uniswap, a protocol which facilitates so many transactions every day and has so much value locked, it was created by like, I think now they have like 20-30 people, right? So we have very few people in crypto producing billions in valuations. So there's very little human value contribution, but very high capital value contribution. So that doesn't mean that they are valueless. It just means that less people produce more value. So yeah. Continuing, lost in the mania of easy wealth from speculative trading in the absence of any value creation, in the rotation churn of moving bets from one table to the latest hot game. And that is absolutely true. We are in a mania phase, I think, in the market, and I do believe that it can run for a bit longer. And yeah, we had so many opportunities in real estate, in the stock market, in crypto. And even if you're just focusing on one of these markets, for example, in crypto, there's all these narratives just constantly rotating. Like now we have Avalanche, before that we had Solana, and before that, like a few months ago, we had Polkadot, and probably we will get back to Polkadot soon. And like you can always just rotate all these narratives, and it's not really based on fundamentals that much. Maybe they contribute a little bit to it, but it's more just like the meme effect of it, that many people are talking about it. And I really wonder how much Twitter must contribute to crypto's market cap. But yeah, so we're looking at bubbles, and that we are not people are just investing in it to get really quick, get rich really quick, but we can actually do that. So yeah, that's just the trend that we are currently on, and I think it is worth looking at it. Sorry for my English. So yeah, just two more sentences I highlighted here. By incentivizing speculation and corruption, reducing the rewards of productive work, and sucking wages dry with inflation, America's greased the skids of collapse. Absolutely agree. So in conclusion, the speculative gains to be made in the collapse of the mass delusion will be spectacular, absolutely, because the Federal Reserve is printing so much money, and the question is if they can really taper or not. And either way, I think that crypto is in for massive bull runs right here. But so, with all this aside, why do I think that DeFi and crypto is just a giant bubble? First of all, I want to say, I don't think that blockchain, and I don't think that crypto in general is worthless. The opposite is the case. I think it has a huge use case in the future. And also I think that Bitcoin is a great experiment so far. I hope it is successful. But at this moment, I do think it's pretty much speculation, even though the network effect is pretty big. But yeah, let's see. But today I don't want to focus on Bitcoin, because that's a whole other discussion. I want to focus on DeFi. So first of all, I want to explore the DeFi stack. There are also some great articles, by the way, which I can really recommend by Multicoin Capital. But here's something I found from Staking Rewards on the Google image page. So yeah, at number 0, you have basically the layer 1 infrastructure, right? They, here in this point, they say, okay, Bitcoin is layer 0, the store of value. You could argue that layer 0 is also US dollar still. But in the crypto universe, of course, there's USDT or USDC and Bitcoin. So then we have layer 1. Layer 1 is the Bitcoin network or the Ethereum network. And you have all the transactions and all the computation running on that layer. Then on top of that, you have oracles, you have privacy protocols like oracles for providing data, privacy just some extra service for people who want to remain anonymous. And then we get to the second layers, which could be Matic, etc. They are not on here, which also just scale the first layer, and they're providing faster scalability for transactions. So now we are coming to the D apps, right? So now we have lending, saving, liquidity markets, derivatives, decentralized exchanges, automated market makers, all this kind of stuff. Now we have insurances. Now we have fiat bridges, payments, whatever. You can see this, right? And so where in this chain do you see value? Is that a value chain? Is that a chain that ends in something that creates value? I don't think so. I think this is infrastructure. This is just pure infrastructure. And what we need is we need a product for people to want to buy and use. So this infrastructure actually has a use case. So I want to explain this a little bit further by looking at the real world. In the real world ecosystem, we have the infrastructure. The infrastructure is banks, is clearing houses, is how our money is able to flow from bank account to bank account, and of course also the streets we walk on and the houses in which companies produce their products and services. Then we have the second step, it's capital. So we have institutional as private lending and money markets, we have banks, we have the Nasdaq, we have the stock market, where capital can rotate and be allocated to different resources and companies who in the end produce products and services. So we can see Apple and Facebook and all these companies, they are borrowing money, or they are issuing stocks and getting money in that way, and this money is used to produce products and services that everyday people buy and use and pay for with money. And then this money is returned in form of cash flow, either in dividends or stock buybacks to the investors. And for that, you all need customers. So we have the chain is, we have infrastructure, so everything runs smoothly. Then we have the capital, and for people to make things with it and to have the proper incentivization. Then we produce products and services, and then we have customers who will buy and use these products and services. So this all makes sense and has use. So I would argue that at the moment, DeFi and crypto is in a stage where we have infrastructure, we have lots of capital, but we don't really have products and services, so we don't really have customers. What we have today, honestly, I think the first real product on the blockchain is NFTs. Those are the first products. And I say that because before that, you could interact so much with crypto, right? You could go on Ethereum, bridge your tokens to Matic. You could go on Matic and then go on QuickSwap, decentralized exchange. And then you could buy some other tokens. You could buy, let's say, you buy wrapped Bitcoin with it on Matic. You use that wrapped Bitcoin, put it into Aave, and borrow against your wrapped Bitcoin and as USDT. So you use that USDT and put it in a yield farm and get additional yield. So when you do that, you're using so many stacks of the DeFi layer. I think you're using basically the whole DeFi stack, yes? You're using all the infrastructure. And everything of these has tokens you can buy. And, well, sometimes they have total value locked, sometimes they have transactions, whatever justifies the valuations. But what do you actually need them for? I mean, you're using a money market. You're using Aave to borrow and lend money. But what do you need that money for? Well, you buy some token, which you think will rise in value. based on the total value locked, because people put money into that because they are incentivized by some yields. But what do you do with that? Like, nobody is doing anything. There's no products. So you have all that infrastructure. You have all these applications. You have all these DApps. But what can you do with them? Nothing. At least that I would argue. There's very little products in DeFi at the moment. There's some video games, which I would also call, like, most of the time, the products on the video games are NFTs. So yeah, the current state of crypto is we have very great infrastructure. It's still building out and it's still scaling. And I think we've seen great progress so far. And we have like a little bit limited use cases in NFTs as products, which at the moment are only digital art. And we have the Lightning network, and you could argue that there is value in allowing people to make transactions between borders, for example, in El Salvador or in Afghanistan or whatever. So that is very cool that this is being enabled by blockchain technology. But I think as a whole, we could say that there's incentivized demand and deflation powered by inflation. So what do I mean by that? So my example was on Matic and Aave, right? Here's Banky on Avalanche, so we can see you could put AVAX here, get 6.18% APY for borrowing AVAX, and then you could lend, for example, DAI at a rate of 4.75, oh sorry, whatever. You could borrow DAI, and then you could put this DAI into yield yak, for example, with DAI USDT, and earn 52% interest on it, right? And the way you earn money by it is because you earn revenue fees and so on. So, then again, who uses USDT? You only use it to transact between them, right? So I think I've made my point clear here. I'm not saying that nothing has value, by the way. I do think that there's some services in crypto that really have like revenue streams and cash flow, for example, Curve. Like, just imagine everything is valueless, right? Doesn't matter, everything is valueless, but people are transacting these values, these assets, right? So if you would own Curve, and Curve pays you a revenue stream of the cash flow that the Curve system produces when people exchange USDT, DAI, etc. And people do that all the time to transact then different tokens with it. So there's a lot of revenue created just by people transacting. So I do think that these automated market makers like Uniswap, SushiSwap, and also Curve, I think there's a lot of value that these can produce just because there's so many transactions and so much revenue on the crypto system. But in the end, aside from that, which is also just a financial product, this whole thing is just a financial bubble iterating on itself. It's just one financial service on top of another, on top of another, on top of another. But in the end, there's no product that's catering to. Banks exist and they lend money because in the end, there's a company that produces a product or service that produces a cash flow, and they wanted to scale that and produce more of this product and sell more of it. And that's why banks lend money. In DeFi, people lend money because they think a coin might go higher and so that they can repay that debt. But there's no real value at the end of the chain, at least I would argue. The value is the innovation itself and the perspective of the future. So that brings us to our last segment, the future. Because that's where I think DeFi can get valuable. I'm just worried when this future will happen. So I think the future which will make crypto and DeFi very, very valuable and actually give these valuations some sense today is the metaverse, as you can see here, tokenization of assets, and cross-chain interoperability. So I think that the metaverse, I think, would be very, very great for crypto. So just imagine that you have a lot of games and you can own real-world assets in these games, and you have virtual economies in a world where people live more at home and they have VR glasses, etc. Many people are not working in the real world anymore because there's machine and AI who can do their work but still produce much more valuable output for the society. So people are basically replaced but they still want to contribute to society, right? They want to be happy. They don't want to be depressed, which they probably would be if they couldn't work. So I think metaverses are a very great idea where people could contribute to society, feel valuable, and have some fun, right? So this is like probably a very boomer way of looking at metaverses. But yeah, I think metaverses can provide unique value to crypto because when the metaverse is completely digital, I think it makes sense that this runs on crypto, and then you have, of course, cryptocurrencies actually that you use to transact in these games, and now you have all these rails to really exchange all this value. And then, of course, I think that is even bigger is the tokenization of assets. So I'm talking about real estate here. I'm talking about tokenized stocks, and I think this is when these two things come on the blockchain, tokenized real estate and tokenized stocks. That's when crypto isn't in a bubble anymore, because that's when you have a product at the end of the value chain. Because now you have the lending markets, now you have the infrastructure, now you have the rails, now you have the whole DeFi stack, and then you have companies that all these things like can work with together, and these companies produce real products. So I think then when this happens, then we have a customer, then we have a value chain, and that's when DeFi is not a bubble anymore. The question is, when will that happen? I do think that we will see institutional adoption. I mean, we are already seeing institutional adoption of Bitcoin, and I think this will increase in the future, especially when we see that the US dollar is in demise, and crypto can go up as long as the US dollar can lose value, basically. Yeah, but I think the technology isn't there yet, and also the regulatory framework for people to actually buy and sell tokenized stocks or even real estate on the blockchain. Of course, there's many other opportunities, and from a technology standpoint, this probably would be possible today, but just from a legal standpoint, it's not possible. And while I do think that technology should come first and the law should adapt to the technology, sadly, that's just not working. So I think we should all be looking forward to regulatory frameworks, because I think once these happen and once we can actually have like tokenized stocks and real estate in the blockchain, that's when all these valuations probably are starting to make sense, right? So yeah, that's my thoughts on DeFi and why I think it's a massive bubble. And yeah, I am 100% in crypto and I'm continuing to invest in crypto. And hopping from one trend to the next, I am focused on cash flow producing assets like SushiSwap and stuff like that, and also on money markets which have like a value capture. So, for example, if you look at Abacadabra money, which Magic Internet Money as their stablecoin backed by the Spell token, it's similar to how Iron operated back then. Just a quick note here, I'm not talking about that now, but basically Spell is used as collateral for Magic Internet Money. So the more people think that Magic Internet Money should have value, the more people will buy Spell. So basically the higher the market capitalization of Magic Internet Money, which is just like a basic function of network effects, the higher would be the Spell token. So I think these are the best bets. I mean, just in comparison, if you look at Matic or Solana or even Avalanche, I do think that these can have phenomenal rises, but the fees are so low that you don't really need the token so much. And Ethereum, for example, can have a very high market capitalization because you need Ethereum to pay for all the transactions. And even though like the transactions are mocked and said, well, Ethereum doesn't really work in scale because there's so much transactions, so high transaction fees, I think this is one of the reasons why ETH has such a high valuation, because everybody needs ETH to make transactions, right? And you don't need that much Matic tokens. You don't need that much Solana. You don't need that much Avalanche. So basically, these chains are getting punished for having better solutions for these scalability problems. But then you don't really need the token. So I think what makes these tokens in the end valuable is if a lot of people think, okay, yes, we will see this token as a currency. And yeah, very interesting to see. Will we have a decentralized currency system where there's lots of different currencies, or will it all evolve into a system where there's a concentrated few currencies and of course a few smaller ones? Like for example, there's Bitcoin, there's some fiat currencies, and there's Ethereum, or maybe there's Solana, whatever. Let's see how the free market decides what is money. But yeah, to wrap this thing up, I hope you found my perspective interesting and you learned something out of it. I hope that you disagree with me on some points and you develop your own opinion. And if you have any comments, looking forward to a healthy discussion. And to wrap it up, so I think DeFi and crypto is in a massive bubble because at the moment we only have infrastructure and lots of capital. There's very few products and services in the crypto ecosystem and no customers. But if these products and services are coming onto the blockchain, I will get very bullish on DeFi. But I do think that this might take a while and we should be looking forward to regulation so this way is cleared for us. But in general, since we are printing so much money, I think that it's the best place to be in right now. And I will look for other opportunities once they arise. And I hope we will see Bitcoin coming out of this ahead and DeFi. But I'm just here for the money. I'm interested in the tech, but I won't place my capital into ideology. All right, so that's it for me. Hope you guys have a nice day, and I hope this was entertaining, and see you soon.